So what you're looking at here, it's not TradingView. This is actually OKX, OKEX, or however you want to call it. So for those that don't know, OKX offers 1 second time frame, which means that you can go to any perpetual pair, even a meme pair like PEPE, and you can get the 1 second time frame. But the purpose of today's video is to talk about flat bottoms and flat tops and how that can lead to very good trades. So for those that don't know, markets are made up of limit orders and market orders, okay? What can tend to happen is if there's a very, very large order, meaning a very large limit order at a certain price, price can sometimes have trouble breaking that. But what tends to happen is that if price is able to burst through that order, then typically price just blows past it. So I'm going to give you guys some examples of how you can trade the 1 second time frame to get a little bit of an edge. This isn't the only strategy you should be doing, but it is one that could probably give you a very, very large edge. So if you look here, let me go find there's a million examples of this, but let's go find an example right here. So do you guys see right here how all of these lows were at the same level? That's probably because there's a large limit order that was there. Actually, it's definitely that there's a large limit order there. Let me go find another example. Oh, right here. This is what I wanted to show, yeah. So do you guys see right here that it has the same high? If we look at the high here, it says 415. The high here, 415. They're all 415. Why is that important? There's a very large limit sell order at 415. What that means is that if price goes just one tick higher than 415, it will probably just send and go far beyond that point. So with this kind of strategy, it can be very good if you're bullish already to try to buy right before price breaks this. But there's also a breakout trading strategy on the 1 second time frame where when a large limit order is filled, you can actually take the trade in that direction, meaning that if a large sell order is filled, you could buy and then take profit higher. So had you done that here, had you said, oh my gosh, this large sell order just got filled right here with a lot of volume, that's very, very bullish. Had you bought even at the top here on the 1 second time frame, you could have enjoyed in a few seconds a 5% gain. Okay? Now, I don't remember what happened here, but do you guys see that these are all equal lows? This is very, very natural. You're going to see a lot of flat tops and flat bottoms, and these are large limit orders that have yet to be filled. I will bet you that if price breaks the level here of what is this low? 425? If price breaks, it's not really an equal low, but if price breaks this area, it's probably going to tank. If it breaks it, and still, actually, now that's a limit order right there. The way that you can spot these orders is you need it to all be at the same price. So what I was showing back here, guys, this was not accurate right here. These all don't have the same low. Do you guys see that? They need to all have the same low. And the way that I screen for lows is right here where it says L. Now, if we look here, look at this. They all have the same high where it's bursting up against 429. Do you guys see that right there, that high? It's bursting against 429. It breaks 429 right here and then just goes higher. This happens time and time and time again. Another one right here. This is a low. It was broken. Price went lower. Let me go see if I can find an example where price really struggled to move past a certain level, and then it did. Yeah, this was probably was this halted trading? I don't really know. Let's go see here. Oh yeah, this might have been one too. There might have been a large limit order here that was filled. Price went lower. So what you really need to be on the lookout for is those flat. Oh, right here, yeah, flat bottoms and flat bottoms and flat tops. This one had an equivalent low. You can see here, 42702 was the same low just about every single time. You can see that right there. It was almost always just 42072. There was a very large limit order right there. And then when that order got filled, there was a volume spike indicating a lot of selling. And almost always what I've noticed is when a very large limit order gets filled in the very short term, price just bursts past that point multiple percent, especially on a meme coin. Now, you guys might be thinking, okay, this can work and all, but what's the reason? The reason is actually not too complex. So let's say that there's a very large buy order. A very large buy order at the price of, I don't know, let's find another example and I'll do a hypothetical. Let's say there's a very large buy order at the price of 405, that low right there. Because there's a very large buy order at 405, it's likely that not many other buyers are going to want to put their buy order below 405. Why on earth would you do that? Because if you do that, you're getting front run by a large order. No one wants to be front run by a large order. It's really bad trading. So what ends up happening is something I like to call sucking the liquidity out. So when a very large limit order can appear, like let's say right here, what can end up happening is maybe all of the bids around here just disappear. If a lot of bids disappear, that means that price might have a much easier time going right past that level. Not only that, but another reason why price can just burst past the limit order and keep going in that direction in the very short term is imagine that there's an order of 10 million US dollars right here for this bid. And let's say that 9.9 million of that 10 million gets filled. If there is $9.9 million worth of selling at this price point, do you really think that all that selling is just going to stop? I mean, it's probably more likely is there's going to be multiple orders hitting it because it's not allowing price to go any lower. And as multiple orders hit it, those could be very large orders. Then you get a lot of slippage, and then the lack of limit buy orders lower, you just tank. This is why this is one of the best strategies in the short term. So, I mean, you can see it right here. This one had equivalent lows here, and then price fell. Now what I want to do is we can look at depth. You can actually see some large, oh my God, it's moving so fast. We can actually just look at the order book here. So right here, let's see. So we don't really have any large bids or large offers, just like 506. Yeah, nothing really like too crazy here, as you can see. What we would want to see is like this in the thousands, then that would be a very large bid or sell order. Okay. But right now we're not really like seeing any large bids or offers that, oh, maybe this guy right here. Do you see that? It can happen very quickly, but if you're able to spot the equivalent low or equivalent high, then you can really have a large edge. This doesn't work on every pair, of course. I like to use this on very volatile pairs, such as PEPE. And in the short term, it can give you a very, very good edge. Now, this being said, this is not the only thing that one should be doing. You know, there's a lot of other analysis that needs to go into this as well. But as for order book trading, this is one of the better ones. You can see right here, equivalent lows at, what was it, like 311, yeah, and then prices burst past it. The last thing I want to say about this is this. It's one of those things where people say everything you know about blank is wrong, but it's kind of true here. Everything you know about order depth is wrong. A lot of people teach you that a lot of bids, a lot of limit buy orders mean that price is going up. A lot of sells, meaning a lot of limit sell orders, means that price is going down. That is absolutely false, and a lot of the time it's the opposite that happens. Order depth trading is not based on the size of how many bids, how many offers. It's based on how those orders are treated. That's good order depth trading. So what I mean by that is if there's a lot of bids that people keep selling, almost always the sellers win. The buyers are not going to win there. If there's a lot of buying and a lot of sell orders right here, almost always if people just keep buying, the buyers are going to win, price is going to go up in the short term, and then eventually it might come back down. But typically when those orders get aggressed, they typically get filled and price tends to go beyond them. So again, this kind of goes to show that a lot of people are like, oh, if there's a large bid order, a large limit buy order here, price is probably going up, right? No. If people keep selling on it, now you know it's very, very likely that price is going to just tank. So looking for other examples here. Yeah, this is a good example because it did take some time. This one, we had a very large order, a very large bid at this whole area. Not really a great example though. 813 around here. And then price kind of struggled to go higher. And then when price did break it, it kind of, it went up there. Not really the best example though. This one had equivalent lows. So guys, actually, this is the last thing I want to say. When you see this, you need to mark this line on your chart. You'll probably see it because the order book will show a very large bid here, but you don't want to sell here. What I mean by that is it's better to sell in the break. Because if you sell in the break of this, then you get to enjoy the short-term collapse that can sometimes happen. So we have an equivalent low of 308. Let's go see what happened when 308 was hit. Right here, 308. Here, 308 was hit and price went down. How much more than 308? Oh, 308's right. It's so hard to tell because this thing is so volatile. The limit order was right here. Price went down another 1% or 0.9%, and then it kept going lower. So yeah, overall, guys, definitely this is a strategy to look out for. Look for large limit buys, look for large limit sells. You can also find these from flat tops and flat bottoms where market highs or market lows keep touching the same exact point over and over again. You're also going to see this in order depth right here when a very large limit order is being approached. Okay, so like right there, that was right there. Did you see that 14,000 contracts right there? Right here, look at this. Perfect example to end the video. If that gets filled, price is going to surge. Look at this right here at 32. So this is a flat top right here. I'm so happy that we got to see this live. If 32 breaks, price is going to surge. Okay, so buying right above 32 probably wouldn't be a terrible strategy in the short term. But do you guys see this flat top right here? This doesn't mean we should buy now, but what this does mean is that if we get to 32 again and we start to break it, it might be a great time to do a breakout trade in the short term. But this is a very large. Now the order got lowered. Look at that, 31912. If that order gets filled, I mean, price is going to surge right past it. So that's going to do it for this video. I will see after this video in the short term what ends up happening. If you guys want more high alpha strategies like this, trying to find your edge, no matter if you're a short term, long term, medium term, arbitrage trader, does not matter. The link in the description below has a link to my Discord where for only $15 a month, I do live trades, share analysis like this, and do every single thing I can to help you become the best trader you can. You can book for a month and then you can just cancel, remove your credit card, all good, and just to see what it's like. And if you're curious about it, click the link in the description below, and I'm pretty confident that you're not going to be disappointed. So with that, happy trading, and I'll see you guys in the next one.